Meet the world's wealthiest 29-year-old, Sam Bankman-Record-Breaking Fried's crypto fortune. By capitalizing from the cryptocurrency explosion, FTX co-founder Sam Bankman-Fried made $22.5 billion before turning 30. Yet he's not a real believer. He simply wants his fortune to last long enough for him to be able to give it all away. Sam Bankman-Fried walks inside Electric Lemon, a clean, conscious cafe on the 24th floor of the five-star Equinox Hotel in Manhattan's Hudson Yards complex on a hazy late summer evening. Despite the fact that the 29-year-old cryptocurrency billionaire has flown in from Hong Kong in part to co-host this exclusive party, he tries to blend into the corner of the room. On the streets below, his plain clothes, black sweatshirt, gray khaki shorts, beat-up New Balances might blend in, but in this sea of cufflinks and cocktail dresses, he sticks out even more than 6'9". Tito Toppin, a power forward for the New York Knicks, is mixing with the fans. It's not long before Bankman-Fried is swamped. Is it okay if I pitch you something? What are your thoughts on the recent cryptocurrency crash? How about an Instagram photo? It's all part of the job for the world's wealthiest 20-something. In July, Bankman Cryptocurrency Fried's exchange, FTX, which allows traders to buy and sell digital assets, such as Bitcoin and Ethereum, attracted $900 million at a $18 billion value from investors, including Coinbase Ventures and SoftBank. Each month, it handles about 10% of the $3.4 trillion in face value of derivatives, mainly futures and options, exchanged by crypto investors. Over the last 12 months, FTX has pocketed 0.02% of each of those deals, netting about $750 million in almost risk-free revenue and $350 million in profit. Separately, Alameda Research, his trading firm, had a $1 billion profit last year. For the industry, it's a really weird, awkward in-between time, he says. In half of the world's countries, there is just a lot of uncertainty. Bankman-Fried had yet to purchase a single Bitcoin 4 years ago. With a net worth of $22.5 billion, he debuts at No. 32 on this year's Forbes 400, just 5 months shy of his 30th birthday. Except for Mark Zuckerberg, no one in history has ever amassed such wealth at such a young age. What's with the irony? Bankman-Fried isn't a crypto convert. He's scarcely a believer in the first place. He's a mercenary who's only interested in making as much money as possible, no matter how, so he may give it away, to whom or when he doesn't know. Steve Jobs was enthralled with his clean, straightforward designs. Elon Musk argues that his company is in the business of saving humanity, not Bankman-Fried, whose earning-to-give mindset drove him into the crypto gold rush, first as a trader, then as the founder of an exchange, simply because he knew he could make a lot of money. When asked if he would forsake crypto if he thought he could make more money doing something else, such as trading orange juice futures, he responds without hesitation, "I would, yeah." Bankman-Effective Fried's altruism, a utilitarian-inflected concept of providing the most good possible, is virtually exclusively theoretical at the present. He has only given away $25 million so far, or around 0.1% of his money, making him one of the Forbes 400's least generous members. Instead of cashing out now, he's wagering that by riding the crypto wave longer, he'll be able to double his donating by a factor of at least 900. "I want to make a difference," he says, but to get there, Bankman-Fried, who relocated to Hong Kong in 2018 and the Bahamas in September, will have to fend off increased government scrutiny and outsmart an army of competitors vying for the business of more than 220 million traders worldwide, all while navigating the boom and bust crypto cycles that can spawn great fortunes at breakneck speeds and then wipe them out just as fast. Kevin O'Leary, the star of ABC Shark Tank, has invested in FTX and serves as a paid spokesperson. He's accomplished a lot so far, and he has a lot of investors' respect. I'm one of them, but his work is only getting started. Sam Bankman-Fried, the son of 2 Stanford law professors, grew up reading Harry Potter, watching the Giants, and listening to his parents discuss politics with West Coast academics. He enrolled at MIT after graduating from a tiny private Bay Area high school that he believes would have been very amazing if I was more hippie-ish and liked science less, spending more time playing video games like StarCraft and League of Legends than studying. He imagined himself as a physics professor. However, he was primarily concerned with ethics and morality. He immersed himself in utilitarian philosophy, particularly effective altruism, a Silicon Valley-inspired approach to generosity championed by Princeton philosopher Peter Singer and embraced by Facebook co-founder Dustin Moskovitz. The core principle is to use logic and evidence to do the most good possible. People usually donate to popular causes or organizations that have had a personal impact on them. An effective altruist uses data to determine where and when to donate to a cause. He obtained a high-paying finance job trading ETF for quant company Jane Street Capital after graduating from MIT in 2014, and he donated a portion of his six-figure salary to charity organizations. When the FBI shut down the Silk Road illicit online marketplace in 2013 for selling all kinds of contraband in exchange for Bitcoin, for example, or when Mt. Gox, the world's primary crypto exchange at the time, collapsed in 2014 after losing 850,000 Bitcoins, worth about $460 million at the time, he paid little attention. He spotted an opportunity near the end of 2017 when Bitcoin was undergoing its first popular bull run, rising from $2,500 to roughly $20,000 per coin in just 6 months. He saw that the fledgling market was inefficient. He could buy Bitcoin in the United States and sell it for up to 30% more in Japan. He explains. He quit his job in late 2017 and started Alameda Research, a quantitative trading firm, with around $1 million in savings and help from friends and family. He set up shop in Airbnb, Berkeley, California, with a group of new college graduates and started working the arbitrage trade full-time. Because they couldn't convert Japanese yen to dollars quickly enough, his entire crew would have to stop working and swarm foreign exchange websites. He claims he was moving up to $25 million worth of Bitcoin each day, at its peak in January 2018. However, he quickly became dissatisfied with the quality of the big crypto exchanges. They were designed to make it simple for individuals to purchase and sell a few Bitcoins, but they were unprepared to deal with professional traders moving big amounts of money at high rates. Sensing his opportunity, he decided to start his own conversation. In 2019, he founded FTX with some of Alameda's income and $8 million raised from a few smaller VC firms. He promptly sold a piece to Binance, the world's most popular cryptocurrency exchange by volume, for almost $70 million. It was sluggish going at first. A dozen staff worked at standing desks in a WeWork in Hong Kong, attempting to entice traders to their new exchange. He quickly carved out a niche for himself, catering to more experienced clients wishing to trade derivatives such as Bitcoin options and Ethereum futures. Many futures traders lack ideological convictions when it comes to cryptocurrency. They, like BankmanFried, are only interested in making money. As a result, they make a lot more trades and for a lot more money than the average retail investor. As a result, FTX, which takes a cut of between 0.005% and 0.07% of each transaction, charges higher fees. FTX is also one of the few cryptocurrency exchanges that offers tokenized versions of regular stocks, such as a crypto token that represents an Apple share. Profit margins are high, around 50%, because the company has essentially no overhead. BankmanFried lacked the necessary permits to operate in the highly regulated derivatives markets of the United States. As a result, he decided to headquarter his company in Hong Kong, partially because he had just returned from a Bitcoin conference in adjacent Macau. That first helped him gain clients in Asia, which is a hotspot of cryptocurrency trading. Digital nomads, on the other hand, have little roots. He announced, naturally, on Twitter at the end of September, that he planned to relocate his 150-person company's headquarters to the Bahamas to take advantage of clearer crypto legislation and less stringent COVID-19 travel restrictions. His American exchange, which is smaller, is based in Chicago. FTX has grown tremendously in just 2 years of catering to the more skilled trader. It is the fourth largest derivatives exchange, behind only Bybit, $12.5 billion, OKEx, $15.5 billion, and industry leader Binance, $61.5 billion, with an average daily derivatives trading volume of $11.5 billion. It only did $1 billion in deals per day a year ago, with 200,000 users. BankmanFried has raced to grow up his servers and beef up customer service and compliance as his user base has swelled to 2 million. He can accelerate engineering timelines up by amazing amounts of time via the force of his persona, says Anatoly Yakovenko, the founder of Solana, a cryptocurrency with a market worth of $43 billion. The nimbleness and speed with which BankmanFried executes has drawn a lot of investment interest. According to PitchBook, crypto-focused venture capital firms such as Pantera Capital and X Network Capital invested $40 million in the company in January 2020, valuing it at $1.2 billion. By July, it appeared like every major venture capital firm in the globe wanted a piece of FTX. He was successful in raising the $900 million round, bringing the company's valuation to $18 billion. Despite his early success, Bankman-Fried has one flaw: he's old. He is the poorest among America's 50 wealthiest people. Forget about Swiss bank accounts and a well-balanced stock and bond portfolio. He owns over half of FTX and more than $11 billion in publicly traded FTT tokens, which may be used to make payments or trade discounts on the FTX exchange, similar to a gift card or store credit. He also has a few $billion in other cryptocurrencies that he is supporting. Despite his early success, Bankman-Fried has one flaw: he has low cash reserves. He is the poorest among America's 50 wealthiest people. Forget about Swiss bank accounts and a well-balanced stock and bond portfolio. He owns over half of FTX and more than $11 billion in publicly traded FTT tokens, which may be used to make payments or trade discounts on the FTX exchange, similar to a gift card or store credit. He also has a few $1 billion in other cryptocurrencies that he is supporting. It's no wonder, then, that he's made far more money than he's given thus far. His $25 million in lifetime donations, which he has directed toward a variety of causes, such as voter registration, global poverty alleviation, and artificial intelligence safety, is about similar to a normal 29-year-old American dumping $15 into his Salvation Army bucket. He agrees that there is a lot of work to be done, and that major donating is not a short-term aim. It's a long-term relationship. At the moment, almost none of his profits are being donated to charity. So far, FTX and its staff have set aside $13 million for charity, including a pledge of 1% of net fees. But he's largely putting money back into his businesses, including paying $2.3 billion in July to buy back Binance's 15% ownership in FTX, double down on his wager that if he keeps amassing fortune, he'll be able to give back more later. For centuries, billionaires have been troubled by the trade-off between earning now and donating later. Warren Buffett and his late wife, Susan, debated whether they should let compound interest increase their money and then give it away, or donate their assets while they were still alive. Money does compound after all, but so do many of the world's ills. Susan came out on top in the end. Buffett declared in 2006 that he would begin giving away nearly all of his riches, which would be spent immediately. Chuck Feeney, the 90-year-old co-founder of duty-free shoppers, who has given away his entire $8 billion fortune, says, "I see little reason to wait giving when so much good can be made via supporting great charities." Another concern: is profiting from cryptocurrency fundamentally incompatible with Bankman's purpose, do good? Crypto mining, the process of solving random mathematical problems in order to earn new currency, consumes enough energy to power Belgium for a year. Those concerns are valid, but they are occasionally exaggerated. Crypto isn't a significant outlier when it comes to carbon created per dollar of economic activity, according to Bankman-Fried. It's definitely 2 or 3 times worse than the ordinary corporation, but not 20 or 30 times worse. FTX buys carbon credits to offset its consumption and is investing $1 million in carbon capture and storage projects, according to him. The question of where he goes from here is maybe the most difficult of all. He needs to figure out how to keep FTX hypergrowth going without running afoul of government regulations. In countries like China, Bolivia, and Turkey, cryptocurrencies are openly outlawed or subject to severe restrictions. This year, Congress in the United States has introduced at least 18 bills that directly affect the business. During a recent spat over Lend, a proposed crypto lending product, Brian Armstrong, the Millionaires CEO of Coinbase, slammed the Securities and Exchange Commission. It was eventually dropped by Coinbase. Meanwhile, Bankman-Fried has been putting FTX $900 million capital infusion to good use, looking for acquisitions that will either increase his user base or get him licenses to operate in critical regions. FTX stated in August that it would purchase LedgerX, a New York-based exchange that has previously been granted authority to offer crypto derivatives by the U.S. Commodity Futures Trading Commission. This means that, ahead of Binance, Coinbase, and Kraken, FTX could be the first major crypto exchange to offer derivative products in the United States. Former CFTC Chairman Christopher Giancarlo said, "They acted commendably quickly to cut the arrangement." He's also investing hundreds of millions of dollars in traditional marketing. In June, he agreed to spend $210 million to imprint the FTX brand on the Premier Sports League TSM. In March, he agreed to pay $135 million to rename the Miami Heat's arena, and in August, he agreed to pay $17.5 million for the naming rights to UC Berkeley's football field. In addition, he just launched a $30 million marketing campaign to promote FTX with celebrities like Shark Tank's Kevin O'Leary, NFL great Tom Brady, and NBA sensation Steph Curry as ambassadors. FTX is owned by all three of them. The goal for Bankman-Fried is to portray his risky, 2-year-old financial enterprise as safe and mature. It's a lot easier if your company becomes part of regular conversation. He also wants to expand his horizons beyond cryptocurrency. He led FTX into prediction markets last year, allowing traders to wager on the outcome of real-world events such as the Super Bowl and presidential elections. He's eyeing broader expansion, too. The hope is that one day customers will be able to buy and sell everything from an Ethereum call option to a share of Microsoft or a mutual fund on FTX. There's a large world out there, says the crypto boom's single biggest beneficiary. We shouldn't expect crypto to be the most fertile field to work in indefinitely.